Hey guys, it's great to be back with you again. I know there's a lot of investors out there who get really confused when they look at the investing landscape. So I'm going to explain how it is that you can approach the stock market and think about it in a layered approach. I think it's a piece of cake, no pun intended, but I'm going to walk you through kind of the precedents of where I think you should start from a first layer. And as you start to either identify that you have certain layers in place, and as you build upon those layers, as you look to build your portfolio out, it's going to make it a whole lot easier if you just take the layered approach to it as opposed to looking at the market in its entirety. So guys, if it's your first time tuning into the message, I would encourage you to subscribe to the channel. Help us support the message that we're putting out there. Let's go ahead and get started. The first thing that I talk about and I emphasize all the time is the importance of cash. You got to have some cash built up. Prove to yourself that you can set that intermediate baseline. And this is going to be contrary to traditional means of investing every bit of last red cent that you have into the market all at once. I really think we need to take more of a structured approach, more of a builder's approach to the market and getting this cash layer. Now, I don't talk about some investing layers in this video. You guys can see that I don't have mutual funds on this list. I don't have precious metals on this list. And finally, I don't have real estate on this list, but obviously lots of different asset classes that we can enjoy. I don't have vintage cars on the list. I don't have, art that's worth a lot of money either. But we're strictly talking about equities and fixed income, okay? How we can build out the portfolio based on your age, your risk tolerance, and your investment goals. And I think to just give you guys a starting place, cash really meets that starting place, all right? Now, I put in line on the very first level here, fixed income. And this is one of those steps that if you're in your 20s, this is something that you may want to kind of keep in mind or put on the shelf until later on in life, because as you get older, you're gonna wanna introduce some fixed income to your portfolio as you get older, all right? Now, as you approach, later on in life and you get to be 50, 60, a good portion of your portfolio should be taken up by your fixed income, okay? And that's gonna come in the form of your corporate bonds or your US Treasuries, all right? And I offer those solutions to take a look at the Vanguard ETFs. That's what I specifically own. I'm at about 12%. Pretty appropriate for my age, but fixed income is the first one to just kind of keep in mind. Now, the next one is employer 401k. And a lot of you guys may actually have this started. You need to acknowledge and say, okay, well, that's awesome. I've got this layer already started. That's not the end all be all. And for a lot of people, that really can be it. They'll just focus on this layer right here, have some cash, and maybe introduce some fixed income. Maybe there's some fixed income rolled into this employer-sponsored 401k or 403b. And that'll work for them. These two first levels can really can work for a lot of people and do work for the majority of people. There are some drawbacks, of course, to the employer 401k. They can be really, really confusing, and a lot of people really don't know what they're paying in way of fees when they go with the 401k. This is kind of a sleepy way of investing is the way I explain it. And I look at a lot of 401ks. There's a lot of good ones out there, and I think there's equally a lot of bad ones out there as well. And I think a lot of people who invest in this may or may not kind of have a very specific idea, or they've had to reach out and get some help on their exposure for their 401k programs. But the next one is where we really start to get interesting, is if you've got these in place here, you've got the cash, maybe you've got the 401k in place, and you come to the Independent Investor channel, we're talking about how you can add that layer of self-directed aspect of the portfolio on top of your existing layers. This is where it can really get interesting. And your total market ETFs is why we offer the VTI. The VTI is an awesome option. Now, you can get the equivalent index fund if that's what you prefer. I tend to prefer the ETF. It's just easier entry into the total market, the VTI, but that's a perfect example of a total market ETF where you just buy the one ETF and you enjoy the entire market. Okay, large cap, medium capitalization, and small cap exposure to the entire stock market. That product holds about 3,600 offerings within VTI. And as we start to increase our layers, we start to get a little bit more specific. And that you may look at the sector ETFs, and I've rolled this out as a solution to look at in way of just owning the 11 sectors or a few of the 11 sectors: real estate, industrials, technology, financials, staples, discretionary, materials, utilities. You can own those sector-specific ETFs, and you can buy the entire sector. And this will work for those investors out there who don't want to own single stock. If you don't want to own just ExxonMobil, you can go in there and just buy the entire Sector Spider ETF for energy, for example. Okay? You may not want to buy Dow DuPont, so you may want to just grab your exposure to the materials sector by just buying the entire sector. A lot of people look at this, and to get some real estate exposure, instead of picking out a couple of REITs, they can go ahead and go with the VNQ, all right? And that's the Vanguard's offering for your real estate exposure. So this can work really good. Up until this point is where we have diversification in the portfolio. So you can kind of see how we're building diversification into the portfolio as we get up toward the top tier layers in the portfolio. Next, we've got stock and, of course, value. This is really one of the favorites of the YouTube community. Dividend paying stocks. We're all aware of the value stocks out there. I don't need to, belate this topic. You guys are all aware of your large cap financials, your large cap technology that have been established. Intel, perfect example. JP Morgan Chase, right? Your high paying dividend value, and you get into some of the dividend aristocrats, right, that have paid the dividend for over 50 years. This is where you get into your value stock, and this doesn't fit for everybody. But I think the idea behind the lesson is that you don't just jump to a value stock portfolio without addressing maybe this cash layer down here, or maybe some exposure here to some total market ETFs. And I know there's viewers out there that don't have the diversification here. They don't have the diversification here. They're not seeking diversification through some sector spider exposure, and they don't have any fixed income, and they want to jump right to the stock portfolio with dividends. You can do that, okay? But just keep in mind that when you start to parlay and overlook some of this diversification, you're really kind of subjecting your portfolio to some risk there, and that you may have a small handful of value stocks here, but you don't have diversification in the portfolio. So we add this toward the top here. And when it's time to introduce some value to the portfolio, it's great to do that. That's the way I invest. The next one in the list here is your growth stocks. When it's time to add some growth to the portfolio, maybe you want to add some Adobe, some CRM Salesforce, maybe a Facebook to the mix here. That kind of comes in the next layer. And for a lot of you folks who have these preliminary layers in the portfolio already made, it might be time to kind of subject this layer here and start building out a little bit of growth exposure in the portfolio. Finally, I just mentioned options and some speculative investments here. I typically look at this as no more than 5% in the speculative. I know a lot of you guys hit me up with the MJ option nowadays. I know that's the craze. Man, look at how much you're passing up to go right here to the speculative. And I would never recommend that. But for you guys that have kind of went through your progression here in building out the portfolio, certainly there is a place in certain portfolios for some options and some speculative. Guys, thanks for tuning in. In my opinion, investing in the stock market is as easy as cake. It really is. And for you guys that are new to the stock market, it might help by taking more of a layered approach, understanding what are those products out there that you can seek out in an orderly fashion to introduce your exposure to the stock market in more of a calculative manner, as opposed to just piecemealing it away and maybe pick up some exposure here and maybe a little bit up here. Look at it more of as a transition and a layer building of your portfolio. It'll help you immensely make sense of the stock market. Guys, I really hope you appreciated this layered approach to portfolio building. Again, hit the subscribe button, help us support the channel, hit the thumbs up to support the video. Leave your comments at the bottom, guys, and I'll catch you next time. Thanks so much for tuning in, and good luck in your investment future.